Good morning. Welcome to IG's early morning call. It's Tuesday, 19th of December. Let's take a look at the headlines as we wait what looks like to be a market which is a little moved at the start of today's European session. We've got that US equity market rally continuing in the States yesterday. And in fact, the Nasdaq was within 4 points intraday of a new all-time intraday record high. S&P 500, Dow, both very close to moving into that record sort of area of the market. Looking for the London markets to hold on to yesterday's gains and the DAX and the CAC holding on to yesterday's losses. Yen on the way down in today's session. We got the Bank of Japan out today with its decision on interest rates. And surprisingly, to some economists, there's been no indication of any near-term move on interest rates. And in amongst the corporate news headlines, Federal Express reports earnings after the bell this evening. What about shipping companies? Are they finding the pressure as a result of a lack of demand? We'll take a look at that. Take a look at what's happening in volatility. After the gains in the last couple of days, we're holding on to the recent highs, but in fact, you look at the long-term picture, you can see absolutely pretty much the bottom. And that bottom in the last few days has been new 5, almost 6-year lows for volatility. But what it has meant is we've meant to see money going into these equity markets. London has been pretty much an underperformer. And this line up here at 77.47, the highs that we saw back in the 21st of September, seem now unable to be achieved in the current run of things. Certainly, we've got a little bit of a hesitation going on. This trend is in place, and in the longer term, we might see it tip over that. But we've got thinner volumes going down into the weekend, a long weekend. It's a 4-day weekend here in the UK, 3-day weekend on many of the other major Western markets. 76.18, got the London markets holding on to yesterday's gains. And in amongst some of the other markets on the way down, yesterday was the German DAX. And we've got that market holding on to the losses that we saw yesterday. It's exactly the same thing for the French CAC 40. But bearing in mind, we've seen recent record highs for these markets. It's just a question of pulling back on from those records that we've seen recently. Overnight in the Asia Pacific markets, a quick update on where we are in terms of the market close there on the Nikkei 225, ending with the markets up 1.4%. We've seen some relatively positive news coming through for the markets on from the Bank of Japan, which I'll take a look at in just a moment's time. But the day was really swinging around what had been a negative day for the Nikkei, for the Japanese yen, which gave a little bit of an upside impetus for the Nikkei. Also gains across the board on the Australian markets, a rise of almost 0.9%. That Santa Claus rally really pushing into some of these other markets that have seen some really big gains so far in the month of December. Hang Seng Stock Index has found that going a little bit more tough than had otherwise been the case, down almost 1% on the trading day today. Let's take a look at what's been happening on the Wall Street close, because, as I said, we were within a handful of points of a new all-time intraday record high yesterday for the Nasdaq, and gains as well for the Dow and the S&P 500. We saw the first trading day yesterday for Uber after coming into the S&P 500. I'll take a look at that in just a moment's time. But I do want to take a look at what's happening with the major benchmarks, because the story was really all about these record highs we've seen recently for the Dow Jones Industrial Average, peaking up above the previous high that we'd seen back on the 5th of January 2022, and that upside really motoring in the last few days or so. S&P 500, just a quick reminder as to where we are there. This red dotted line is a record high at 48.18. 47.41 is where we're trading at the moment as of the close of yesterday's S&P 500 24-hour markets. We're holding on to that gain that we'd seen, which actually is where we are now, highest since the 13th of January 2022. So very nearly 2-year highs for this market. But I think the one that really stole the headlines yesterday was this rise on the Nasdaq. And you can see that the Nasdaq in yesterday's session, it didn't quite go there, but it was ever so close to that intraday record high on the 22nd of November 2021 at 16,769. And the markets you can see at the moment, that tiny little doji star candle holding on to the gains that we saw as of the close on the 24-hour markets yesterday. Record high intraday, full day closing cash session yesterday, and this market not too far away, as I said, from hitting a new all-time intraday record high. We'll see what happens when the markets move on today. There's not necessarily too much, I don't think, that's going to be really driving these markets, but I think it's all about individual shares, as we've been talking about. And one of those yesterday was Uber, coming into the S&P 500 for the first time yesterday as a stock that's part of that all-time, part of the broader market index. Looking at this market in yesterday's session, not quite an all-time high for this stock. That record high is at $64.05. Yesterday, intraday, what was that? Friday, last week, I beg your pardon, intraday, closing at 63, intraday 63.52, not too far away from the record high at 64.05, but a pullback since then. And yesterday's session ended down at 61.68. But as I said, it was really just a question of marking that first day's trading on the S&P 500. As expected, the Bank of Japan out with an interest rate decision today, leaving things around the maintaining of its ultra-loose monetary policy. Let's take a look at the details of the meeting, because the two-day session ending on Tuesday, 19th of December, the Bank of Japan keeping its short-term rate target at a negative 0.1%. And that for the 10-year government bond yield around flat. It also left unchanged a loose upper band of 1% set for the 10-year yield. Now, there's a couple of markets I think it's worth following up on for this. Now, this interesting move that we've seen here on the dollar against the Japanese yen. I was talking about this area of support last week, whether or not that was going to be broken. And for me, that was the big question mark. Since then, we've seen this market rise. That is the dollar rising against that weaker Japanese yen, yen weakening. As the BOJ dashing hopes that it would tweak the language to signal a near-term end to negative interest rates. Instead, the bank said it would not hesitate to take additional easing steps if necessary, adding that uncertainty regarding the economy was extremely high. And I think it's worth considering this chart in the context as well of what analysts are talking about, because they believe the Bank of Japan may want to wait for months, possibly January and then possibly even April, when it will be releasing its quarterly outlook report with fresh growth and price projections. Now, the other market to watch out for, this weakening of the Japanese yen, has given upside to the Japanese Nikkei 225. And you can see a relatively strong day in the session today. All this comes as more than 80% of economists polled by Reuters back in November expect the Bank of Japan to end its negative rate policy next year, with half of them predicting April as the most likely timing. Some see the chance of a policy shift in January. But in the interim, the Nikkei 225 seeing some relief as a result of this decision that we've seen from the BOJ today. A couple of weeks ago, the Reserve Bank of Australia decided to keep its cash rate steady at 4.35%. We've just today seen the minutes released of that meeting and show how Michelle Bullock, she is the chair of the Reserve Bank of Australia, and her team of policymakers are trying to find the right balance before considering the latest macroeconomic data. Let's take a look at the two sides of the argument, because on the hawkish side, the board agrees that there's a risk that returning inflation to the RBA's target range of between 2 and 3% will take longer than expected. Consumer price inflation running at 5.4% in the third quarter. But this is balanced by the risk that aggregate demand slows more quickly than anticipated in the economy. The Australian economy barely growing in the third quarter. Exports have been in a downward trend since the middle of last year. Households have been cutting back spending. The jobless rate hitting a 1.5-year high at 3.9% in the month of November. Now, for this one, I'll take a look at what's happening on the foreign exchange markets, because I think it's interesting to see that the Australian dollar, bearing in mind the weakness of the US dollar behind this, but the Australian dollar has been gaining ground against a whole basket of currencies. And in today's session, if it closes at these levels, it'll be the highest close we've seen for the Aussie against the US since the 31st of July this year. Since May last year, the RBA's ramped up interest rates by a whopping 425 basis points. So part of this rise that we've seen for the Aussie, as I said, is because of the weakness in the US dollar. But in fact, in today's session, you can see, if you look at other charts here, we got the Aussie gaining against other currencies as well. It's not quite so marked against the euro, but recently we've seen the Aussie hit levels we've not seen there since June this summer. For the Australian dollar against the euro. But one of the big moves has been against the Japanese yen in today's session, this big markup for the Aussie against that weaker Japanese yen. Of course, Japan, having left interest rates on hold and giving no indication of interest rate rises, has seen a weakening of the Japanese yen. So again, the Aussie benefiting from other areas of the market. But futures in the Australian markets now imply just 5% chance for a rate rise at the next RBA meeting, which is in February, and 2 quarter-point cuts by the end of 2024. Now let's move on and take a look in some more detail about more of what's been happening around some other central banks and some economic data that we're due later on today in Canada. At 1:30 p.m. UK time today, we get the Canadian Consumer Price Index for the month of November. Let's take a look at what's happening there. Headline CPI is expected to rise by 2.9%, down from 3.1% in the prior month. That would be the lowest level of inflation since June last year. But more importantly, core CPI growth is forecast to fall to 2.5%, a new 2.5-year low. Now, I want to show you what's happening with the Australian dollar, because in amongst this is also what's been happening with news from the central bank. Now, the central bank chief, Tiff Macklem, and his team give opinion that the Bank of Canada monetary policy was moderating spending and relieving pricing pressures. In an interview yesterday aired by BOC Governor Tiff Macklem, he said the Bank of Canada could start cutting rates next year as long as core inflation comes down as predicted. Let's take a look at what's happening with this chart here, which is the US dollar against the Canadian dollar. The US dollar recently weakening, the Canadian dollar holding on to much of its recent strength on the news today. The Bank of Canada had previously forecast inflation should hit 2% by the end of 2025, but now the bank believes it should be closer to target by the end of next year. Early this month, the BOC kept its overnight rate at 5% for the third consecutive meeting, leaving borrowing costs at a 22-year high. But as I said, this is partly due to a strong dollar story, a weak dollar story, sending the dollar down against the Canadian, which is holding on to those recent gains in the market. Now, let's shift gears and take a look at what's happening in terms of some of the corporate news headlines. We've seen a trading statement out for the full year from Superdry. Superdry trading statement is talking about a first half characterised by challenging consumer retail market and abnormally mild autumn. Now, the thing about, for me, for what's going on with Superdry, let me just bring up a chart here to show you what's going on, because I think there's an underlying problem at Superdry because it has a whole range of clothing, and just because it's seen a relatively mild autumn, for me, doesn't give me enough impetus or doesn't give me enough reason to believe the company when it says it's finding the going tough. Why does it not just sell more clothes that represent a milder weather? We look at the share price chart for this, and you can see clearly the direction of travel. Despite this 82% increase that we saw in shares from December last year through to the beginning of January, since then it was another trajectory on the way down, and indeed record lows recently for this stock. The stock will open at 40.5 pence. I cannot see a single word uttered in the statement today, especially if you read between the lines, where we've got anything to celebrate. Full year retail revenue down 13%. Wholesale revenue down 41%. Yeah, okay, look, they've taken out the wholesale US operation, so that's really part of that. But there's an underperformance of the channel agreed by the company. Full year profitability expected to be impacted. It says a further update will be provided at the interim results in January. But I can't see anything that gives me any hope that this stock's going to rise today. We're opening at 40.5 pence. Let's see what happens at that stock at the beginning of today's session. Also worth watching what's happening with the Swiss bank UBS at the start of today's trade. Early this morning, it was announced that the activist investor group Cevian Capital had taken a 1.3% stake in the Swiss banking giant, worth around $1.3 billion, and it's now a top 10 investor in the bank. The significance of this is that clearly the activist investor wouldn't have bought unless it sees value, but it's just a question of how it sees value in what it wants the board to try and do. 1.3% is not enough necessarily to persuade board away from its ordinary strategy, but there are opportunities here for activist investors to pick up some of these relatively cheap stocks and then impose their own hopes and wishes on what's happening. But the thing about UBS is this stock has risen considerably recently. It'd be interesting to see what Cevian Capital says when we get the statement out a little bit later on today. Let's take a look at this chart. Since UBS agreed to take over Credit Suisse, its shares have risen almost 50%, up to 25 Swiss francs, 25.38 is where it's going to open this morning. Cevian co-founder Lars Forberg thinks it could be double that. As he says, UBS is valued like an average European bank, not as a leading global wealth manager, which he believes will be the benefit that stock will have. So this is a potentially positive stock story. We're looking for gains at the start of today's trade. It trades in the US as well, and my colleague Angeline Ong will be following up on this later on today for the look ahead to the US Open at 1:30 p.m. today, UK time. Meanwhile, US shipping company FedEx reports after the bell this evening. It reports its fiscal second quarter numbers. In the past 2 quarters, the shipping demand has been very much under pressure. In the lead up to the holiday period, shippers have been offering discounts to customers in a period when they usually raise prices on increased demand. But that hasn't happened this time around. Let's take a look at the figures that we're looking for. FedEx managed to benefit from events that affected some companies in the sector. In recent months, it picked up business from bankrupt delivery company Yellow, also getting some of the from negotiations between rival UPS and Teamsters, which has taken so much time. Analysts anticipate earnings of $4.19 a share, down from the $4.55 in the previous quarter, but about $1 higher than this time last year. Revenues forecast to reach $22.37 billion, nearly $500 million lower than this time last year. I just want to show you what's happening with the stock of FedEx. It's not an all-session stock. But nonetheless, you can see clearly here the direction of travel that we've got. And indeed, in yesterday's intraday trade, we've seen the highest print on shares that we've seen since the 27th of July 2021. So money is going into this area of the market. Given the current environment, investors will want to know how much volumes have been hit and how much margins have shrunk. So certainly a stock to watch after the closing bell on this Tuesday. Now let's shift away from the corporate areas of the market. Just want to follow up very briefly on what's happening with gold. Gold in the session in yesterday's trade, seeing some gains on from the recent hesitation, I should say. Currently trading at 2025, not too far away from the rise that we saw in yesterday's session. If anything, I think silver has done a little bit better indeed in today's session. Second day in a row of gains at 23.86. But of course, silver hasn't hit an all-time record high, which we've seen gold hit at recently. And just to wind up everything else and take a look at what's happening with the price of oil, pretty much holding on to the recent gains that we see in yesterday's session. We hit a 3-week intraday high, but since then the market has pulled back. Long-legged doji candle yesterday indicating to me that the market's now more hesitant as to where to go next, and you can see a red candle in today's trade, not knowing what's going to happen. Likely to see margins drift lower over the next few days. I don't anticipate too much move unless something happens, of course. One of the really big concerns is what's going on in the oil markets, and of course the continuation of global politics playing into what's happening, and concerns about Black Sea and what's happening with some of the oil supplies. Now that could see some gains in the price of oil in the next few days. We'll have to see how that news develops. But at the moment, at least, we're holding on pretty much to where we were as of yesterday's trade at 72.66 for US crude. That's it from me. We're back at 10:30 with Charting the Markets. Do watch out for UBS at the start of today's trade and a potential downside, possibly to new record low for Superdry.